Hello and welcome to this Thursday's morning market briefing. We've got lots to talk about, but firstly, US inflation falls to 2.9% in July. So as that crude rally stalls after IEA forecast oil surplus. We've got lots to talk about on the charts also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. But the first article we'll talk about is to do with US inflation. Now, the figure for US inflation has now come in at 2.9%, marking a 0.1% fall when looking at last month's CPI figure for comparison. This comes as a surprise to economists who in fact expected the inflation figure to come in at the previously achieved 3% mark. So of course this is a big it's a big achievement for the Fed, some would say, or at least it's something that the Fed is going to be very happy about. As we know from not too long ago, we covered on this channel the recent kind of stock market collapse being driven, of course, by the kind of weakening levels of growth within the US economy and the kind of stagflation, therefore, that we're seeing, and how that's worrying many investors within the economy and many business leaders as well, who are looking at the Fed and they're saying, you've cut interest rates, or you haven't started to cut interest rates, and therefore if you are going to start cutting interest rates, you're just frankly cutting them too late now, as US growth has already started to stall, and therefore how much can you really resolve with some late interest rate cuts. So that's kind of been the argument so far, and what we've then started to see people speculating about is, rather than we're going to see maybe a 0.25 percentage point rate cut like we previously expected, of course, we may now possibly receive a 0.5 percentage point rate cut. So basically two rate cuts in one, just to make up the ground that of course they're losing out on. But even if we then see that, many bring into question the kind of issues that could arise from that. Of course, if you're seeing massive rate cuts like 0.5% per meeting, then that also brings into question whether you're then encouraging inflation back into the economy, because of course if you make some large cuts rather than these small cuts that can be analyzed, you can see the effects of them, then you can make another cut or not. You have that choice. If you make a 0.5 percentage point rate cut, it's very hard to kind of reverse that, or even keep it at the same level. You're going to want to actually raise it back up if you start seeing some iffy numbers coming out regarding inflation, with inflation going up and that kind of thing. So that's why the Fed's in a really sticky position, and that's why this inflation figure is, of course, great news to them. As I did note in the introduction, economists were only expecting a 3% figure, which is what the US got in June. So they didn't expect any change, and that's kind of, as you can see in this graph, which I've just got here, provided of course by the FT. If you look at that graph, you can clearly see that basically for most of 2023, quite a few months of 2023, 5 months or so, we've basically seen those inflation figures just stagnate. We haven't seen much change, and as you can see there, they've stayed around the 3% figure or just above, so around that 3.3% figure even. And ultimately, of course, that's been very worrying, because it presented a stubborn inflation problem. It presented this problem in which the Fed had raised interest rates to multi-decade highs, and ultimately wasn't making the kind of ground that other nations around the world or economic blocs were making around the world through their kind of interest rate cutting plans. As we know, of course, with both Britain and obviously in the Eurozone as well, we've seen the ECB and Bank of England start to cut their interest rates now, because ultimately their inflation figures have come back down to target levels or very near. Whereas the US, of course, if your inflation figure is still sitting at 3.3%, you can't exactly say that you've reached your 2% target. And that's why we haven't seen any of those interest rate cuts just yet from the Fed. So ultimately, this is, as I said, many times now, this is a very positive figure for the Fed. The question is it enough, and is it just too late, frankly? As I previously noted, we were already starting to suspect the Fed to cut interest rates, no matter the inflation rate figure, just because growth is stunting so much that they kind of need to cut interest rates to just save the economy in some parts and prevent a recession, as that's the kind of key worry at the moment. And it's also, of course, the key worry of both Biden, of course, wanting to end on a high note somewhat of saving the, or beating inflation and keeping growth strong. And of course, the VP Kamala Harris, who's basically campaigning with, the kind of the progression or the achievements of, Biden's presidency on her CV. And so the question is, of course, how will she be able to go into debates with Donald Trump and go into the election race, talking about how, that she's going to improve the economy, what she's going to be able to do for America, when her economic record is presenting stagflation as the most recent, result. So that's the kind of key thing that's, of course, weighing on Kamala's head. And that's why, of course, this figure that's recently come out, will just come out, is, of course, very positive for her and her plan for presidency. The question is, of course, where we will continue to see these inflation figures come in at levels, where we're seeing them decline, or, of course, a 2.9% figure, even though it's below 3%, is still within that kind of 3.3%, 3% bracket, really, or just outside of it. So for us to really understand whether inflation's going to start coming down to that 2% target, we're going to have to see at least 2 more inflation data readings to then finally know. And of course, by that point, it may be too late to kind of keep the US economy floating in the same way that, of course, it has for the past 2 years. But we'll, of course, keep you updated on this topic, and it's very important to keep your eyes on it, of course. With this figure marking the first time that the headline CPI figure has fallen below 3% since March of 2021. That said, the core inflation figure, unlike the headline figure, rose 3.2%, which is still ultimately down from the 3.3% reading in June. These latest figures will now be great news for the Fed and also key businesses across the US who have been hoping for interest rate cuts for quite some time now. These figures hopefully present the image to the Fed that they have in fact pushed price pressures back down enough to make their first rate cut since they started raising them. Biden and Kamala Harris will also be very pleased to hear the latest inflation figures, as this will allow Biden to hail victory over inflation during his presidency, and it will also allow Kamala, of course, to head into the election period with a victory over inflation as VP. So those are, of course, the key points to take from this inflation reading. Definitely keep your eyes on the economic calendar. We'll come to that near the end, of course, when we'll talk about what data is coming out today, because there's also some very important US data to note that you need to be listening out for once again. But we'll come to that near the end, as I said. But the next article to talk about is to do with crude oil. The topic of oil, a very important topic, of course, that we always cover on this channel, as of course, it's an asset or a commodity that we're always looking at, analysing, and I'm sure many of you trade. Now, the price of oil has now suddenly jumped higher following recent data showing that there's been a significant supply shortfall. This data has come following the IEA forecasting that global inventories will grow. So ultimately, we haven't spoken about oil in quite some time now. Obviously, on the article section, we always talk about it on the charts, like I said earlier. But ultimately, we haven't spoken about it as much on the articles, because when we are kind of talking about oil, we're more so talking about it in the kind of geopolitics sense. In the sense of those events creating supply or demand issues for oil, which affects its price. As of course, whilst these IEA forecasts have a massive impact on the way people perceive oil and the future of oil's price, and therefore the way it's traded, at the same time, it's the day-to-day events across the world regarding world tensions, and especially world tensions especially tensions within the Middle East, which massively affects the way oil is priced in. As of course, over the past week or so, or 2 weeks now, we've seen oil's price spike back up to the kind of $83 a barrel level, ever since, of course, we heard that basically the Middle East was heading towards a regional war, kind of a faster rate than previously expected. And, we were looking at Iran possibly taking revenge on Israel in a very serious manner by using its proxy network. And we're still kind of waiting on something like that possibly happening. We don't know whether that will happen, of course, but there's always the chance that it will, and the chance of that has of course risen following Israel's alleged assassination of both Hamas's political leader in Tehran and then also, of course, a Hezbollah leader in southern Beirut. So that's kind of why oil's price has gone up recently, and that's just a kind of great example of how basically oil's price is affected by these geopolitical events, which is why we're usually covering that topic rather than maybe covering every minute piece of data that comes out regarding oil. But of course, the IEA forecasts are very, very important to know always. Possibly the greatest affecting piece of data, or the piece of data that probably affects price the most out of all of those kind of pieces of data that we could know on this channel, and therefore, of course, we always try to cover it. And ultimately, of course, oil, as this article does note, has seen Olympic levels of volatility. As ultimately, we've seen, the world, the tensions within the Middle East creating all this volatility, but also, of course, we've seen kind of back and forth forecasts to do with demand and supply, which have contradicted themselves, and as a result, created this kind of volatile range for crude oil. But of course, we'll come to that again on the charts just later. But first, let's get into the article, with the IEA now having predicted that growth in demand for crude oil will actually soften as the summer US driving season ended in coming weeks. They also made the very important observations that there will be certain production increases that will hit the market later this year. The report did, however, help fix some of the recent volatility in the markets, with the price of Brent crude oil having risen a large 7% since the start of August, and that was kind of what I was talking about there regarding Middle East tensions, which has driven oil's price to the upside. The report, however, allowed Brent crude oil to fall 1.5% to the levels around $81 a barrel, and we show that on the charts in just a moment. Oil's prices, as the FT has noted, has ultimately struggled to break out what is a tight range this year, since oil is now averaging around $83 a barrel. This range was formed following counteracting forecasts of weakening demand and then rising tensions in the Middle East, as well as some production cuts. Many economists and analysts are noting the possibility of oil slipping to the downside should any bearish news hit the markets this week, in line with easing world tensions. The IEA is expecting the growth in demand for oil to be covered by the supply increases. So some very interesting forecasts there from the IEA. The question is whether kind of events in the Middle East will also kind of align with the news and therefore create a kind of clear move to the downside or upside, or in fact we're going to see some counteracting news and therefore some volatility like we've seen already over the past month or so. That's all to talk about in this article though, and the articles as a whole. Next to talk about, like always, is the charts, where some interesting things are of course playing out as we do begin on the US 30, the Dow Jones, which has moved to the upside over the course of the week. As if we go to the Monday of this week, because I know I missed out yesterday's morning market briefing, sorry about that, but ultimately what's kind of taken place over the week? Well, ultimately we saw price stall to start off the week at this kind of key area of resistance, this key area of liquidity near and around the $38 I was thinking about oil there, 38.2% Fibonacci retracement level, so price stunted around there. But ultimately over the course of Tuesday and then yesterday over the course of Wednesday, we've seen the US 30 rise to the upside. Now, why might this happen? Well, ultimately the figures that we received from the US yesterday regarding inflation can easily explain the initial moves to the upside that of course we've seen for the Dow Jones. As ultimately if we're seeing inflation come in at lower levels, then there's a greater chance that the Fed cuts interest rates in the next meeting, or cuts interest rates in a more significant manner, maybe by 0.5%, as I said earlier, and therefore allows key businesses to start investing more, which is why possibly traders are pricing in higher levels for key US stocks, which of course make up the Dow Jones and the Nasdaq and the S&P 500, of course. So that's why we have seen this move to the upside, and now price is sitting above the $40,000 mark on the Dow Jones just for the moment. The question will be though whether it will hold above those levels. Next to talk about is the dollar, which has swung to the downside over the course of the week so far. Now, of course, on Monday, price was sitting at this higher area of liquidity on the 50% Fibonacci retracement level, and I did note how price was kind of in this sticky spot where it was hard to know where, price was going to go next. Oh, pardon me. Ultimately, though, of course, price was sitting underneath that key liquidity zone, and we were kind of seeing this weak flag form, and therefore, we were starting to know how there was a greater and greater possibility that price could in fact break to the downside, as there was a clear lack of momentum for the dollar to break higher. Ultimately, though, whilst price has sold off to the downside, in line, of course, with the US inflation figure that we received yesterday, which is priced in more dovish, more dovish monetary policy from the Fed. At the same time, the dollar has bottomed out around this recent low made on the 5th of August. And so the question will be, of course, whether price, because price is now bottomed out around here, whether price will now return back up to those higher Fibonacci levels, or in fact we're going to stay around these levels and possibly even move lower. So that's the key question at the moment. Definitely keep your eyes on the dollar, of course. Next to talk about, though, is Euro USD, which has now swung to the upside, especially following, of course, the US inflation figure that we received yesterday, which has now caused traders to seemingly price in some more dovish monetary policy from the Fed. So currently, the euro is holding above that kind of, or is possibly, you could say, sitting within that higher area of liquidity that we had previously noted and price reacted to back on the 5th of August. And price has wicked higher than those levels, but ultimately has not closed a candle higher than that area of liquidity. So we'll just have to wait and see to see what plays out for Euro USD. Next talk about, though, is pound yen, if I can load that up. Pound yen, which is kind of just slowly moved to the upside. It's kind of weird price action that we're really seeing play out for pound yen at the moment, as ultimately, when we started off the week, we were sitting at a very key area of liquidity, a key area of resistance, with numerous areas of with numerous Fibonacci retracement levels, which kind of lined up a very interesting possible bearish short. Ultimately, though, price has just kind of slowly pushed to the upside. A clear lack of momentum, but still price has pushed to the upside and is now up and above that key liquidity zone that we are noting to start of the week. So it is kind of hard to note what could be coming now for pound yen, but possibly it's important to note the kind of volatility that we're seeing in the markets at the moment and how that compares to previous price action. If we kind of just understand how price was previously moving around these price levels that price is currently at, then it's easier to kind of contextualize the price action that we're seeing, as you can just see the volatility in comparison to previous price action. So I just wanted to contextualize that for you right there. Next talk about, though, is Bitcoin, which is back and below the $60,000 a Bitcoin level. Really, we've just kind of seen this somewhat range form over the past week or two now, as prices basically struggle to find whether it's going to stay above the $60,000 Bitcoin level or stay below the $60,000 Bitcoin level after, of course, Bitcoin's price crashed around the 3rd of August, 4th of August. And so, yeah, price is now kind of halted, has now halted within this kind of period of consolidation, this area, this range between two kind of areas of liquidity that have now seemingly formed. So definitely keep your eyes on Bitcoin as Bitcoin decides whether to break lower or break higher. Next talk about, though, is gold, which has swung to the downside over the course of Wednesday, despite, of course, the dovish figures that we have received from the US. Now, ultimately, one could say that that's because of potential things to do with the Middle East, because of course gold is dependent on so many different variables, because not only is it kind of a safe haven asset regarding the dollar, but also it's a safe haven asset against kind of world tensions, and therefore if we're starting to see peace negotiations or potential ceasefire or anything like that within the Middle East, gold may then kind of fall to the downside or anything like that. What I'm trying to say is, it's hard sometimes to understand why something might have happened despite a piece of economic data coming out which would make you expect one certain move. But ultimately, prices somewhat reacted to that 38.20 Fibonacci retracement level and liquidity zone. So it'd be interesting to see whether price swings to the upside or price comes back down further to properly utilize that area of liquidity for a move to the upside. At the moment, though, oil is back and down to the $80 a barrel level and sitting at the 38.20 Fibonacci retracement level to be exact. In my opinion, this is a very interesting level indeed, of course, because it's not only a key Fibonacci retracement level of 38.20, but also it's a key psychological level of $80 a barrel. And we have some very important kind of fundamental news on the horizon, of course, with a potential war within the Middle East breaking out. But at the same time, we have key economists forecasting that oil could break to the downside. So it's a very interesting situation for oil at the moment. I think this is the real one to keep your eyes on. That's all to talk about on oil, though. Lastly, on the charts, though, lastly to talk about is the economic calendar. We're receiving lots of very important economic data today, but I'll try and get through as quick as I can. Firstly, we're receiving the Japanese GDP growth rate figure, followed by the Aussie inflation expectations figure. As well as that, we're receiving the Aussie unemployment rate figure and the Chinese unemployment rate, retail sales and industrial production figure. Followed by that, we're receiving the British with a British GDP growth rate figure, as well as the British balance of trade and industrial production figure. Followed by that, we're seeing the US retail sales figure and US industrial production figure. So we're receiving lots of important economic data today, but that's all to talk about on the economic calendar. We've covered lots in the articles, lots in the charts, and lots in the economic calendar. Have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.